What's up, everybody? Welcome aboard. I am here with my man Randall, and we're going to talk about and try to teach the blow-off trade. This is a little bit of an educational video. So, Randall, what's up, my brother?
Hey, Todd, good to see you. Good to be here, man. Yeah, this is just for some new students that are coming in. We want to give them a little bit of a background of what they're looking at, what they're looking for, how to set their charts up, that they can use Thinkorswim, they can use TradingView, they can use Ninja, or whatever platform they're trading on, they can use it. And it's basically we go to set up your charts. Either you want to have it at the 4-minute chart, and then you want to be able to flip over to the 1-minute chart.
Well, I use a 4 and a 1, and the reason that I use TradingView is because I can put up together 8 charts very clearly, okay, where that's harder to do on many platforms. I mean, I also have Thinkorswim here, which I can use, okay? And again, I use 4-minute and 1-minute, but some people may want to use it on different. You can use this on any time frame. You can use 5 and 1, you can use 10 and 2. Again, you need to use 2 time frames, one that tells you that there's a trade coming or going to trigger, and a second one that allows you to trigger that trade. So
Perfect.
we use 4 and 1, and the reason I use 4 is because I like to be different than everybody else. I don't want to be on the same 5-minute time frame that everybody else is on. The only requirement on the time frame you use is the short time frame. Both time frames have to be divisible into 60. Okay, so you can use 1, 2, 3, 4, 5, 6, no 7, no 8, no 9, and then 10. Okay, minutes.
Okay. Well, that's good news. I mean, that's good information. They have to be divisible by 60.
Correct.
Understood.
Otherwise, they won't compute
Right.
correctly because obviously the markets are even. So at the end, I use TradingView only because it's easier for me to teach with, because it's the views are very clear here of the charting. It's hard to get 8 boxes on other platforms. Not that it can't be done, and it doesn't matter. There's a million platforms out there. The only thing you want to make sure is that your data is up to date, because this is an up-to-date trade. It is, as of right now, where we're trading. And the entire blow-off trade is based on what we're trying to do is take advantage of the emotions or the panic of our opponents, because we know, and if you don't know, trading is a competitive business. You are competing against others. We want to take advantage when they get too emotional. We want to be able to grab onto them and take advantage of their mistake. And that's how we create market inefficiencies and how we create benefits in our own markets so that we can have the opportunity to make money. Now, I'm going to stretch this out because we're trading this in an off hour when the markets are not open. But if I put up a 4-minute chart here on the S&P, okay, so this is yesterday basically, okay, so as you can see, if I was looking here, and again, if I didn't make the trade, I never really discussed trades that I did not make, but if I look at this, this was right around the jobs number. You had a spike up, but there really wasn't a trade. Okay, there was really, as I look at it in full, there was a potential buy here because I had an expansion of volume here. Okay,
Right.
and of course, what we're looking for is price either up or down with a big expansion in volume. Now, in this particular chart, the most clear view is right here. Okay, you can see the gigantic spike in volume, the big sell-off right to there, right? We can see both those.
Right.
So this is a spot, and I know that this time here is 12:48. Okay, that's Pacific time. That's my time. So 12:48, there was a huge blow off to the downside. So what would I do? When I recognize that, I would then flip over to a 1-minute chart, okay, and go to, okay, and here is the spot. Here's the 12:48 right here. Okay, this is the end of the bar at 12:52. Okay, and I would have been a potential buyer right here. If I had missed, I would have been a buyer on this bar. Okay, either one. We're not trying to buy the bottom in this case or sell the top when we get a buy. But of course, we then got the desired result, or the rally that came exactly off of that potential sell-off, or that came down,
blow off, right?
That emotion, that
Mhm.
emotional trade that others made, we were able to take advantage and buy that. And what we like to do is we like to trade in at least 2 micro contracts. I mean, you can trade bigger, but it's always better in this business to trade with multiples, because it allows you to take a portion off and still allow the trade to work for you. When you trade only one, you're always forced to make a decision of where to get out.
Yep.
On a profitable.
So you can have your target be 10 ticks above where you got in for your first exit, and then move to break even, and then you can have the next target at 10 ticks, or you can just trail it if you want to trail it.
That's correct. So typically what I do is I trade 5 micros when I'm trading live in class, and I take one off at 10 ticks and one off at 20, which gives me a total of 30 ticks profit if we get there, and then I go to break even on the balance, and then I will trade out of the balance depending on what happens. Okay. But it's all based on this particular move, and it doesn't matter what market it is. Here's the NASDAQ. Did we get a move in the NASDAQ? We didn't get. This was clear here in the NASDAQ. Again, I didn't make this trade, so it's always hard, but it would have been, actually, let me switch this back to 4. Remember where I'm at. So here is the same trade in the NASDAQ that was in the S&P. And again, this is what we're looking for. This is purely panic. It stands above all others, and it doesn't matter whether it's crude. Okay. Now, as you look at crude, there was very little action most of the day yesterday in crude. So there really wasn't any clear blow-offs because there wasn't enough price movement anywhere. There was a couple of volume spikes, but there was not a ton of price movement.
Okay? Right. And we got to have both. You got to have both.
It's got to be price and time moving in combination with each other, okay, to be able to make the trade. And of course, you see the same trade in here, but again, this one might not have been as big because you didn't have as enough of a sell-off in here. Again, there's different things to look at, but the biggest thing you're looking for is, one student once wrote me, is the market's giving me the finger, okay? Because it stands up by itself, and there you can see there's a hand and there's the finger,
right?
Okay. But again, you cannot make a mistake. I mean, the worst that can happen is you'll have a losing trade. But
yeah, but the stops that are associated with this as well, they're pretty big, and in conjunction with this. For example, you're talking about the S&P. We're looking for a protective stop of 6 points beneath the low of that bar on the 4-minute chart, correct?
Correct. In fact, I'll tell you exactly, the stop on this trade would have been, the stop in this trade would have been 57.4850.
Right. And you do that because you don't want to get a blowback and get taken out. I
want to give the market enough room, and basically, if you're looking at it from a math basis, a little bit over 1 standard deviation away, because I'm playing that type of trade. So I want to make sure that I don't get stopped out by accident.
Right. Right. And then you can, even if it moves against you a little bit, there are opportunities where you can add to that as well.
Correct. The only time that we would add to a trade like this is if we got in the same sequence, if we got another blow off, okay, another move that we were still in the trade, and another big, in this case, it would have to have been another big sell off that didn't stop us out. We would have added to our position, bringing our average significantly lower, then allowing us to be in a position to make money, and again, make money faster, because our assumptions come down to the trade itself is going to work about 75% of the time. Okay.
Roger that.
So if you bring in the opportunity and you get another blow off in the same sequence, then of course you want to add to it, because you're at a higher probability of success. You've brought your average price down, and the profit comes in faster.
Yep. Makes total sense. Makes total sense. Now for the new folks, you're looking at having volume on these charts. For example, in the Dow, and correct me if I make these statements wrong because I've jotted these down and you and I have talked about them, but volume for the Dow needs to be at least 20K, correct? Do you want to go over those volumes?
20K, depending on the time of day, but once the markets are open, yes, 20,000 for 4 minutes.
Right. And the Russell?
And the Russell's got to have 5,000. The Dow's got to have 5,000. The NASDAQ's got to have 10,000.
Okay. And the 10-year note?
25,000.
Okay. Gold, I think you said 4?
2 to 4.
2 to 4.
I mean, again,
it just really depends on the volume that or the pricing that's going on, right? Activity.
There's got to be movement. There's got to be price. There's got to be action, of course.
Right. And again, folks, this is, when the markets are open and running, and you see these blow-offs occur. I mean, it is absolutely amazing the panic that you really see when there is really panic. We have not seen a lot of panic in the past 2 or 3 weeks. Would you agree with that, Bubba?
I would agree 100%. It's been very slow. I think, everybody's just kind of waiting, and the markets have really slowed down a little bit. And I think that again, that's one of the things you have to be patient enough to recognize that there's a lack of activity. And then again, as the markets get busier, which they will, then you can start to also be a little bit more aggressive as your tack of trading. But the one thing you must always have is high volume and big price movement. Otherwise, the trade is not worth taking.
Exactly. So part of that waiting for confirmation, can you talk about that a little bit? The waiting for confirmation, once you have a big blow off bar like we have, we touched on that just a few moments ago, but the confirmation that you're looking for, can you go elaborate on that just a little bit?
Well, I'm going to go to the 1 minute chart. Okay. And in this case, I want to be a buyer on this spot right here. So I have to go to the 1 minute and wait for an uptick, which it did come. A green bar appeared, which then gave me the trigger to buy.
Perfect.
Okay? So that's all I'm waiting for, is I'm waiting for a confirmation that the market looks like it's going to reverse, because that is actually what we are trying to play, is a market reversal.
Right.
Okay.
And it doesn't have to close green. It just has to give you a green indicator of some sort if you're going long, or a red indicator.
No, it has
if you're
to
going short.
the 1 minute has to close green.
Okay.
The 1 minute must close green.
Good. Okay.
Again, like we wait for the close of the 4 minute, we wait for the close of the 1 minute to trigger that is actually going to be the trade.
Perfect. So that's some clarification. I have had students ask me that question, and now we've got it recorded, so we know that if they will just listen to this, they can trade the Market Mavericks blow-off trade.
Right, and of course, as you know, I teach it every morning as well when we are working on it, and we're calling it live, and I am trading right with you as I am calling out the trades that go along with it. So yes.
And if the people are missing that, they're missing out on a great opportunity to learn. So sign into that room each and every day if you have access to this thing. Bubba, I think we've covered everything that I wanted to cover so that the students can listen to this video. We can give it to them. It will be included in the email that goes out, that they can listen to it, and it'd be very beneficial to them.
I agree. And obviously, if there's questions, you can always ask them when you're live with me, because of course, obviously it's always easier to do in live time.
Absolutely.
Yes, this will be great. And again, this is a money-making proposition, but of course, like anything else, there's always risk, and there are always trades, but we always know what that risk is.
Yeah, or you don't take the trade. You got to know what your risk is, or you don't take the risk. And if you can't afford to take the risk, don't take the friggin' trade.
Exactly right.
All right,
my brother.
All right. Thank you, Bubba.
Randall, thank you. And I'll send this over to you. Thanks, brother.
All right. Bye.